Gold prices bounced back after the Fed's dovish statements yesterday. We have Jim Wyckoff and Technically Speaking to see why. Jim, thanks for joining me today.
Hi, Alex. Always nice to be with you.
All right, Jim. So dialogue's always analyzed, and the word patience was in there, and that seemed to just throw gold prices up. What did you make of the Fed statements yesterday?
Well, Alex, the marketplace deemed the FOMC minutes as tilted to the dovish side. However, I think the veteran market watchers really weren't that surprised. I think there are external factors that are probably going to push back a little bit the Fed's desire to raise interest rates. There had been a consensus a few weeks ago that the Fed might make their interest rate move in June. Now the market's consensus, although not a clear consensus, is that it may be in September. So the bottom line is the gold market and the stock market read those minutes yesterday as slightly dovish and were supported by such.
Of course, Greece is always in the equation. There's still no resolution between them and the EU. Talks obviously ongoing. What do you make of that situation and the effect that it's having on the gold prices?
Alex, the European Union and Greece at loggerheads over Greece wanting to basically renege on some of their previous commitments. It's nothing new. The market gets numb to this ongoing problem with the European Union and its sovereign debt. However, I think there is a bullish underlying tenor to the gold market, or at least selling interest has been limited due to this concern. Just before we went on the air to Skype, Germany reportedly is nixing an idea to extend some financing, so that might be a little bit behind gold's price strength today. But the bottom line is it's an old issue. It's not on the front burner, at least not now, but probably a little bit underlying bullish for gold.
Now, do you see anything else out there that might be moving markets right now aside from the Greece and EU issues as well as Fed movements?
Well, Alex, the issues in the gold market and that traders are looking at are the continued or the recent strength of the U.S. dollar as depicted by the U.S. dollar index. However, if you look at the daily chart for the dollar index, price action has been trading sideways and choppy for about the past 3 weeks. That could be an early clue that the dollar index bulls have become exhausted. We'll have to see how that plays out. But as long as the dollar index remains in a strong bullish posture, remains near its recent multi-year high, that's going to limit buying interest in gold because of the historical negative correlation with the dollar index. The other factor that has been bearish for the gold market is lower crude oil prices the past several months. And just late this week, we're seeing crude oil prices drop again. And impressive from the gold bulls standpoint is the fact that gold is holding price gains here Thursday morning when we're seeing crude oil prices sharply lower.
Excellent, Jim. Let's look at your Wyckoff market ratings for gold and silver this week.
Alex, we're looking at a Wyckoff's market rating for April COMEX gold of 3. That's firmly in the bearish camp. Prices are in a near-term downtrend. We've got solid technical resistance at this week's high of 1236.70. Solid technical support at this week's low of 1197.20. Looking at May COMEX silver futures, another 3.0 rating for Wyckoff's market rating, firmly in the bearish camp. Silver prices also in a near-term downtrend. Resistance at the recent high of 1747. Solid support at 16.
Thanks for your time, Jim.
Thank you, Alex. Bye-bye.
And thank you for watching this edition of Technically Speaking with Jim Wyckoff. If you have any comments or questions, you can always send them to newsfeedback@kitco.com. Also, GSA Day and BMO conferences are coming up next week. Make sure you tune in for that. Have a good one.